India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Friday morning, and after yesterday's bashing, I think one only hopes that it's a quieter day, which just kind of passes through, and we come back, looking fresh and in a new way as the next week starts. So that's the hope here. Big cut yesterday. GIFT Nifty indicating about a 50-odd point lower start. I'm Prashant Budvi, my colleague Surabhi, and Reema is with us today. Guys, good morning.
Hi, good morning.
Good morning.
Guys, by the way, do you know what is the Navratri color today? It's green.
Well done.
I'm wondering, I have little bits of it here and there, but I'm wondering if the markets will decide to say, okay, it's green, it's Navratri, let's go with green. Enough of red from yesterday.
When is red?
Oh, let's not even go there. I think we've had it already.
Oh. But today's an important session because it comes on the back of a tough week when we were inundated with so much news flow. The China rally, SEBI, the Middle East attack, the rise in crude prices, and next week we've got earnings and RBI policy. So we just sandwiched. It's an important session in that sense.
Absolutely, and the indication is that looking at Dabur and others, maybe earnings are also looking not exactly very excitable.
Yeah.
At least the previews put that message out. But we'll talk more about that as earnings start to come through. And let's sort of tell you what's happened. I mean, because the cut yesterday was large, 2% plus in the Nifty, the Bank Nifty, etc. I thought, why not take a look at how much markets have come off from the highs. The Nifty is down about 3.8%. The Bank Nifty is down almost 5% from the highs. The mid-cap, small-cap indices highs were different. Actually, the highs for each of these indices is on a different date. 26th for Nifty, 27th for the Nifty Bank. Mid-cap and small-cap highs were made even earlier. So 3% on the mid-cap index, small-cap index down about 3.5%. So this is what we've lost for each of these indices, respectively, from the highs for each of them. Now, let's take it to what you need to know in terms of just the cues over the last 24 hours or so. So oil's up another 5%, and we are now knocking at nearly $78 per barrel. And from, so oil was about 71 and something change before the attacks, the Iranian attacks over Israel, and we're at 78. That's a large step move that we've seen in oil in just 2 or 3 sessions. The worry, of course, still remains potential strikes on Iran's oil facilities. And, we were talking about this yesterday, that previous episodes have all seemed a little bit coordinated. This does not seem coordinated, and hence the risk of spiraling out of control. And of course, we'll talk more about this in a bit from now. And that's the worry. Now, equities, nothing very much. They mostly sat on their hands. S&P was flat. Nasdaq was flat. The data point was good. The ISM services data for the US came in at 50, almost 55. Expectation was about 52. It's the highest since February of 2023. Now, services is the larger part of the US economy, and it's also the more sticky part of the US economy. Remember, employment component did dip, but markets kind of paid attention to the rest of it, which was strong. Yields, as a consequence, rallied sharply, 7 basis points to about 3.85% on the 10-year. Dollar was also, as a result of the rally in yields, a global outperformer. We are back at just at about 102 levels on the dollar index. And of course, later today, we'll get the US jobs data for the month of September. And actually, it's a wide range of expectations, starting from 70,000 to 220,000. The median is about 143. And this is only important because, we got the first Fed cut of 50 basis points. Was that the deepest and the largest? And now we'll see 25. Or is there room for, what's the bar for another 50? I mean, I think that's essentially what markets would like to see. If it is closer to 70, which is the lower end, well, markets will quickly price in 50 for the next as well. If it is in line with expectations, as we've heard from various Fed officials, it's going to be 25 over the next many meetings. So let's circle back the levels here in terms of what you need to sort of put the back of your minds. We put out two levels yesterday, the 20 and the 40-day exponential moving average. The 20 got broken convincingly, and we left at the second support level, which is the 40-day exponential moving average, which is 25,222. We left 25 points above that level as of yesterday. So that is the first marker. I mean, it'll be great if you just kind of close around these levels, and we'll kick off and pick up next week on Monday. The hourly RSI, the relative strength index, is extremely oversold. And perhaps that means that in a day, 2 days, we perhaps should see a bit of a bounce. But if you get that bounce, this gap area, which is formed from the fall, which we saw yesterday, as compared to Tuesday's close, because Wednesday was a holiday, is the gap on your screen. 25,640 to 25,740. That's the gap area. That's the resistance zone for the Nifty to take out if you're able to, if you have to build and look ahead. Nifty Bank, similarly, has trendline support. That, by the way, broke the 20-day and the 40-day exponential. The trendline support is at about 51,585. We left off at 51,845, so less than 1% away. The 20 weekly moving average, by the way, below the trendline support is 51,344. These are all very near-term supports, well within just 1% from where we left off yesterday. So keep these in mind. And similarly, like the Nifty, for the Bank Nifty, the resistance zone is that gap area. And for the Nifty Bank, it is 52,582 to 52,817 up on your screen. I mean, lots of variables out there, which I think markets will watch. If yesterday, for example, we saw a very large FII sell number, and at the very near term, if it is to do with, China and outflows out of other markets to fund the China exposure, when China comes back next week, it'll be interesting to see whether they actually walk the talk, because it's all talk right now on the fiscal front, etc. Remember, Hang Seng, after 13 up days yesterday, was down 1.5%, and that's a China proxy. So we'll see. Lots of moving parts. GIFT Nifty is indicating about a 50-point lower start. Surabhi.
Okay, well, if we talk about markets in Asia, just like Wall Street, they're kind of biding time till there's more clarity on what's happening with both West Asia, the whole conflict, as well as, of course, the non-farm payrolls report. Let's just put up the Asian markets as we kick off. There's a little bit of gain on the Nikkei for the time being, and Hong Kong. Let's see what Hong Kong is doing. It's actually managing about a 1% move up, so it's not too bad after yesterday's cool off. Taiwan somewhere in the middle. The market that's declining is actually Australia, which is down about 1%. So mixed cues across Asia coming through. Now, on this flare-up in oil, why did oil suddenly rally 5% overnight? Because, well, the US president moved the market. Reporters went up to him and asked about a potential Israeli strike on Iranian oil facilities. And I want to pull up the quote, so sort of we quote him verbatim. He says, and I quote, "We are discussing that. I think that would be a little anyway." So slightly cryptic, but he said that it was enough for the market to get very nervous about the possibility of the US backing any Israeli move against even oil infrastructure in Iran. So let's see how this plays out. Not sure if it was entirely intentional or inadvertent. Whatever it is, it moved the oil market in a big way, with Brent now closer to 78 than 70. Let's talk about just the non-farm payrolls number that we're going with. I mean, the mean expectation, like Prashant said, is around 150,000. The unemployment rate expectation is 4.2%. This would be a slight improvement from the previous month if we get numbers around this zone. Let's talk about the money moves, and that's what it's been all about, right? Aside of what's happening in West Asia, it's all about whether this is a bit of a sell India, buy China trade going on. And if money flow is anything to go by, you can't ignore the numbers, because yesterday in the cash market, we had selling worth over 15,000 crores from the domestic institutions. And kudos to the domestic institutions. They absorbed at least 12,000 crores of it. But even then, the market had to deal with what it did. If you put the last 3 days together, since the China stimulus really came through, the numbers are massive. 10,000 crores on the 30th of September. That's Monday. Then Tuesday was about 5,579. Wednesday, we had a holiday. Yesterday's number was this massive 15,000. So all put together, $3 billion of selling is what the market has had to deal with in the last couple of trading sessions. So let's see if there's any sort of relief from that, or how long does this tactical trade continue? And that's exactly what we'll ask a lot of our guests today on the show. Okay, let's talk about some of the other cues. The exchanges have spoken, at least one of them. That's the BSE. It is going to be discontinuing the Sensex 50 from the 14th of November and the BankX from the 18th of November. So those contracts go away. The Sensex 30 will, in all probability, be the one that they decide to continue. What will the NSE do? That guessing game is still very much on. We don't have the answers to that. Now, we'll talk about a lot of the business updates that are flowing in. Yesterday, Dabur was a big move in the market thanks to what they're indicating for Q2. Today, by the way, Avenue Supermart is not that bad. I mean, not that they're an exact proxy to each other, But if you talk about consumer demand, avenues numbers are fine. Let's look at a lot of the banks and the NBFCs. Just a quick sneak peek. Bank of Baroda's update is telling us that struggle is continuing. Look at the gap between the credit growth and the deposit growth. There is a gap. It's a big one at that. This is year on year that we're talking about. M&M Finance disbursements are actually down 1%. There's a small deterioration in asset quality. So we'll watch out for this stock. More commentary around this coming up. Bajaj Finance, the big headline number is still around the 30% mark. So the market will probably have a sigh of relief on that, 29% on assets under management. And finally, I'll watch out for the two-wheeler stocks, particularly the likes of even Bajaj and Ola Electric, because guess what? The festive season is on and big discounts are kicking in. Ola announced the Boss sale, the biggest Ola season sale, and discounts are going all the way up to 40,000 rupees on these EV two-wheelers. So is it just festive cheer? Or is it a sign of the major competitive intensity in the EV two-wheeler landscape? So I think some of the two-wheeler stocks will be interesting to watch. So plenty to keep us busy today, Reema.
Oh, indeed. And crude is the big story. And I was just reading that what if Iran's, facilities are attacked? What is at risk? We're talking about 4% of the world's supply. So every day, Iran produces about 3.3 million barrels per day. So that's the amount which is at risk. But oil analysts are also quick to point out that OPEC has spare capacity. So OPEC today is producing 27 million barrels per day versus their theoretical capacity of 33 million barrels per day. So, that's the numbers when it comes to Iran and the impact on crude prices. The question is, does it engulf even the other areas like Saudi Arabia, etc., or is it going to be restricted to, Iran and Israel, etc.? But that's, another story. But for our markets, I think the big question is that from the highs, we've not lost too much, just about 1,000 points from the 27 September peak. Week to date, benchmark indices are down 3.5%, going up to 4% for some of them. So will we have a bounce from oversold regions? Or will the sell-off and the bloodbath continue? But let's get to some equity calls then. We've got Rhythm Desai of Morgan Stanley who says the medium to long-term bull market is intact, but in the short term, the market has to digest rising issuances, policy shifts in the US and China, India's fiscal consolidation, state elections, and the frothiness in small and mid-cap. He thinks banks are the best way to play the next leg. He says they're overweight on financials, technology, consumer discretionary and industrials, and underweight the other sectors.
Okay, well, those are some views coming in.